and that is Sanjay Shah, co-country head of Morgan Stanley India.
Well, absolutely, Nikunj, you said it. Sanjay Shah, co-country head of Morgan Stanley India, is here with me on the sidelines of the Morgan Stanley 20th Annual India Summit. Sanjay, it's great that you could take our time to speak with us. Like I said, my first question was really about, the kind of participation you've seen, through this summit, because it's annual and you've been doing it for the last 20 years. Yes. I'm sure, the scope and scale has only widened.
Yes, so this is the 20th Annual India Summit, and thank you for inviting me. Good to be speaking over here. So over the years, obviously the conference has evolved, as has the interest in India, and this is by far the biggest and in some measures the widest conference that we have had. We have had, including today, we've got about 500 investors from across different geographies attending the summit, almost 75 corporate, and a number of guest speakers to talk about what's happening in India in the context of the way in which the world is evolving, and also in terms of different sectors, companies, themes. So yes, there's been a tremendous response. Number of investors are here, and yes, very engaged.
Very engaged. No, but what I also found very intriguing is that there are a lot of U.S. domiciled funds that are participating in the summit. Just to reference to context there, as part of the global fund allocation, India's allocation is just about 1%. And there's all this talk about how, yes, emerging market funds have good exposure to India, but India needs to kind of scale up in terms of getting more global attention, and that's essentially coming in from the Western world, from US domiciled funds. So it's encouraging to see that a lot of them are inquisitive about investing in India.
So I think India in some ways, in spite of the fact that it's just a part of the emerging market indices, has always attracted a lot of interest from the North American funds, from the global funds, and that's not just the US, but the neighboring areas also. And the reason is that those funds prefer India as a bottom-up stock picking destination. And they have been invested for a number of years, have made handsome returns out here, just given the strength of the consumption market in India and the way the economy has evolved over the years. And that continues to be the case even now. Obviously, of late, the investment attention has waned a little bit because market performance on a trailing basis has been very strong. But the desire to understand India, the desire to make sure that they're on top of things with respect to India and the way the economy is evolving, that's not really gone down. And that's the reason why we're seeing a mix of investors from all geographies. But yes, the North American investors are predominantly the ones who attend our conferences.
But this could be a very interesting time as well, Sanjay, because if you're seeing at the current, with the currency being at an 18-month low, if you're seeing, mid caps and small caps falling like 9 pence, this could be a great entry point for foreign investors, because if the cycle turns from here, then they would get the benefit of a currency rebound as well as an equity market rebound. So keeping that theme in mind, given the timing of your summit, what are the themes or perhaps the pitch that you are propagating, the top 3 ideas that you're selling out to investors?
So look, if you take a step back, we've had a period of extremely strong performance over the last 4 years, and for all the right reasons. So not to dampen the spirit, but just to strike a chord of caution out here, I think what we are going through is some sort of a stabilization and some sort of a consolidation. So it's not just going to be, in my view at least, and in the views of the investors that I talk to, an immediate buying opportunity. I think we will continue to consolidate for some time, and a rebound, if any, will only be at a later point in time. That's partly given the fact that the global factors in terms of the Fed tightening, the strengthening of the bond yields in the US, and the strengthening of the dollar has had an impact on emerging market flows. And to give you an idea, India has seen very little flows, in fact, no flows at all from emerging market investors or from global investors, in spite of the fact that in both the developed market and in emerging market funds, there have been significant inflows. In EM itself, year to date, there's been a $50 billion inflow. But coming to the themes, I think when we think about the themes and when we think about the summit and we talk about that, we really try to go beyond just the now and immediate investment ideas. Our objective is to try and position the summit as a destination where investors can come and really understand what India is about. And when we talk about India, what are the 3 or 4 themes that we talk about? One is obviously the bottom-up stock story, and it's across different sectors and across different segments of the market capitalization, and we make sure that we propagate that as always. I think over the years, though, the symbiotic nature of the Indian markets with what's happening in the world has made it extremely necessary and imperative that we try to highlight some of those areas. So we've got our internet analysts from the US flying down and talking about themes such as Alibaba and Amazon and the Indian internet industry in that context. We've got our metals analyst from China, because China is such an important driver of metal prices. And she's here and she's talking about what's happening in China. And that gives us an idea about what could happen to India, because India ultimately is a commodity consumer. And the last thing that we really focus on is the Indian macro environment. So we've got government speakers, we've got speakers on geopolitics, we've got speakers on politics, and just to try and make sure that we highlight what's happening at a macro level in India.
Let's talk about concerns then, the red flags. One is from the market technicals, this whole MSCI issue. Are investors talking about it? I know it's still a very big if zone, if it happens, when it happens. But is there precedence on how it really impacts flows? Because you were talking about 300 billion locked in passive investments and about $1 trillion in active investments.
So look, I think there have been a couple of instances in Latin America, but coming closer to home in Asia, there have really been very few instances of such things happening. Even the China inclusion, when you talk about the China A-shares inclusion, is in parts, in very small parts, going up to 5%, just given the fact that the ease of access in China is improving now. Now, what happens with MSCI and India, it's really too premature to talk about it, so we really don't know. But yes, we've got about $300 billion of passive investments in emerging markets and almost $1 trillion of active investments. So any impact on weightages will, with a lag, have an impact on flows. But you also have to understand that there are a significant number of global funds who invest in India, as we talked about a few minutes earlier, just given the strength of the bottom-up stock story in India. And they really take out of benchmark bets on India, on Indian companies, on Indian businesses. I don't think that really gets impacted. And the other thing is that the domestic mutual fund has really come of age in the last 4 years. In fact, in the last 4 years itself, there have been the single biggest buyers of Indian equities, buying almost about $60 billion. And those flows continue at a very sustained pace. So that's another cushion to any volatility in global flows.
Second red flag is what's happening with the Indian banking system. And I'm sure there are a lot of questions being asked. Have the banks bottomed out? Has a bad loan situation seen its bottom for corporate lenders, for PSU banks? What's the health of the banking sector?
So we've got a very interesting panel later tomorrow where we are going to discuss some of these things, including NCLT, the IBC, and the resolution of bad assets. And I'm sure it's going to be a very interesting discussion because a lot of investors are interested in that. From our perspective, we believe that the impaired loan formation in India, that's more or less peaked out around the 12 to 14% levels. There are individual banks which will be starved for capital and which will find it difficult to try and grow their balance sheets. And that in some ways is an opportunity for many of the private banks, many of the digitally savvy Indian banks. And so far over the last 10 to 15 years, it's been a migration of asset side franchise to many of these banks. But with digital disruption coming in, we believe there's going to be a transference or a movement or a migration of even the liability side franchise. And that will make some of the banks very profitable as the opportunity set for them grows. And that's particularly true for many of the private sector banks.
In fact, I was quite encouraged to hear Anil Agarwal from the financial services team talk quite positively about the turnaround in the banks and how they could be writing a new chapter when it comes to the credit cycle turning around. The third red flag is really politics. Even though the talk may be nascent right now, because we are talking about general elections 12 months down the line, it would have an overhang in terms of taking investment calls, whether to scale up or scale down, or do you think it's just too premature? And that's a call that nobody's taking right now. What is the side talk on politics when it comes to India?
So look, when we talk about a problem on politics or challenge or at least uncertainty on politics, ironically it gets overshadowed by what's happening globally in terms of politics, geopolitics I mean, whether it be closer home in Asia and North Korea, whether it be in the Middle East or so on and so forth. So I think the attention span when it comes to politics is more towards what's happening internationally. Sure, there is a significant amount of curiosity about what happens in India given the state elections and the fact that we have got a few more state elections coming around in the next few months. But I think that's really more of mild curiosity to understand how the mood of the nation is. We have found with experience that the real momentum and our ability to call the elections really comes out in the last 2 or 3 months in the run up to the elections. Because the mood of the nation also is a little bit fragile, it's a little bit volatile. So yes, there's a lot of curiosity. In fact, one of the most well-attended sessions was one where we discussed what could happen in to elections in 2019. But there are no at least there are no precise conclusions at this point in time.
Okay, interesting. And lastly, the whole situation with macros, rising rates and oil and a falling currency. Whoa, how do you join the dots on those three?
So at least if we take a step back, India is no longer a part of the fragile five, because over the last 4 years, the government has done an excellent job of healing the entire macro fisc, be it the current account deficit, inflation, be it the money supply, or be it the fiscal deficit. So from that perspective, I think we can heave a sigh of relief, and I don't think that's going to change, because the oil burden, in spite of oil going up, the oil burden itself has come down for the economy from about 5.5% at the peak to not more than 3%. Having said that, the reality is that the Fed is tightening, the dollar is strengthening, and the bond yields in the US are on the rise, and that has an impact on emerging market flows. That also has an impact on India, and we've seen the currency also weaken, given the fact that we are sensitive to what happens to oil. And which is why I come back to the point of striking a note of caution at this point in time and not getting too carried away.
Okay. Sanjay, sounds good. You guys do a great job at getting some of the brightest minds under one roof, and we're grateful that you could get us all the insights that you could.
Fantastic. Thank you, and glad to be here, and I hope you enjoy the rest of the conference.
Thank you very much.